Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Hedge funds increased bets against major gold miners, filings reviewed by Reuters showed, as COVID-19 vaccines weakened expectations for the yellow metal after a year of record gains. Gold prices have dipped from last year's record highs above $2,000 per ounce as vaccines deployed against the coronavirus encouraged investment in assets that perform well during periods of economic growth. While we are by no means out of the woods in our view, the light at the end of the tunnel means that gold markets should begin to see an unwind of the trends that became quite exaggerated over the course of 2020, Royal Bank of Canada analysts said last month.
China has suspended imports from a Brazilian pork plant operated by privately owned Aurora Alimentos over coronavirus concerns, according to a statement from a meat trade group on Monday. The Brazilian Agriculture Ministry confirmed that on December 28 Chinese customs authorities enacted an import ban affecting Aurora's plant, according to a separate statement sent to Reuters. The Agriculture Ministry said China requested information about COVID-19 cases at the plant, without elaborating. ABPA reiterated that there is no scientific evidence of the risk of contamination by the novel coronavirus through food consumption.
Moving on to the top news in the energy sector.
U.S. renewable fuel credits rose on Monday to a three-year high, traders said, after the Trump administration failed for the second time to meet a deadline to propose rules on the amount of biofuels refiners must blend into their fuel mix this year. The U.S. Environmental Protection Agency had been aiming for December 31 to propose a rule on so-called renewable volume obligations for 2021. According to its agenda on the Office of Information and Regulatory Affairs website. The EPA previously missed a November 30 deadline, after the coronavirus pandemic complicated the rulemaking process.
Oil prices rose by around $1 on Tuesday as tensions simmered following Iran's seizure of a South Korean vessel and as the OPEC Plus group studied a possible production cut in February. Brent crude futures for March rose 96 cents to $52.05 a barrel by 12:06 GMT, while U.S. West Texas Intermediate crude for February was at $48.53 a barrel, up 91 cents. Both contracts fell more than 1% on Monday after the Organization of the Petroleum Exporting Countries and its allies, known as OPEC Plus, failed to agree on changes to February's oil output. Saudi Arabia argued against pumping more because of new lockdowns that are likely to limit demand, while Russia led calls for higher production, citing recovering consumption. Moving on to metal price moves. Copper prices climbed towards 8-year highs on Tuesday as a lower dollar, expectations of robust demand in top consumer China and falling inventories spurred purchases. Benchmark copper on the London Metal Exchange traded up 0.8% at $7,922.50 a ton in official rings. Prices of the metal, used by investors as a gauge of economic health, climbed above $8,000 last month, the highest since February 2013. The lower dollar is supporting copper and focus is on the vaccines which imply stronger growth in the medium term, said quantitative commodity research analyst Peter Fertig.
China's iron ore futures advanced for a third straight session to a one-week high on Tuesday, as concerns over tight supply pushed spot prices of the steelmaking raw material further above $160 a ton. The most traded iron ore for May delivery on the Dalian Commodity Exchange ended daytime trading higher by 4% at 1,039 yuan a ton, after earlier hitting 1,043 yuan and 50 fen, its strongest since December 29. Iron ore's most active February contract on the Singapore Exchange rose 1.2% $163.09 a ton by 0716 GMT. We will now look at the top news in the agricultural sector. Malaysian palm oil stockpiles are expected to remain low in 2021 because of strong demand from China and a lower Indian import duty amid sluggish output gains, the Malaysian Palm Oil Council said on Tuesday. The market outlook for Malaysian palm oil in 2021 looks bright despite the pandemic, Kalyana Sundram, MPOC chief executive told a virtual conference. Global palm oil supply is expected to be tight this year because of heavy rains caused by the La Niña weather pattern. Malaysian exports in 2021 will rise to 4.5 million tons from 3.7 million tons last year.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.